Hello and welcome back to my channel. I am Christy Vann with Fantastic Finances, and on this channel I teach velocity banking. So today I wanted to go over a quick review of how we are using a line of credit instead of our actual checking accounts and why that makes a difference. So we get paid weekly, bi-weekly, monthly from our employers, which they do a direct deposit now, usually into your checking account. Some employers still pay with checks. So whether you go make the deposit into your checking account or whether they direct deposit it, you have to have a checking account. That's the way that the system is set up, is everybody has to have a checking account. So when the check goes into the bank, we usually leave it sitting right in here. Then we'll pay out our expenses throughout the month. So the subscriptions, hair, nails, personal loans, car loans, home loans, anything that you pay for usually comes directly out of your checking account. Now, why does it make a difference to switch up into a line of credit? When you're using the checking, you see you have $4,825 coming out. Even though this person is paid $5,200 a month, $4,825 is going to be coming out in expenses every month. So when this person draws to the end of their month, they may feel like that they're paycheck to paycheck because the money disappears. It feels like it slips right through your hands, right? Now, this person has a personal loan of $10,000 that they're making $500 a month payments on. So when we get the line of credit, not only will all of the expenses be coming out of here when they're due, but they'll take the $10,000 from the line, pay off the personal loan, put it into the line of credit. Even at 12%, they're going to beat the $500 a month that they're paying over here for 5 years. So when they get the line of credit, they're going to pay off this $10,000 personal loan that's $500 a month. Well, how does that help them? Well, let's see. If they take the $10,000, pay off the loan, this $500 payment is now gone. The loan has been paid off. Now it's into the line. So when their income comes into the checking, they are immediately going to transfer it into the line of credit. Now, it doesn't matter if it's weekly, bi-weekly, monthly. That doesn't matter when they get paid. Just as soon as they get paid, they need to transfer money into this line, which knocks down that average daily balance that the banks are going to charge interest on. And the income goes into the line of credit that's already got a $10,000 balance on it because we paid off this personal loan. The balance comes down to $4,800. Well, that's an average that the bank will use for that day. So, of course, throughout the month, the expenses, all of these expenses are going to be coming out again through this line of credit. So there's two ways that your expenses could come out of this line of credit. Sometimes a line of credit will have a credit card with it. So, of course, you can swipe that card whenever you go out to eat, you go to the grocery store, you get your hair done. You can have automatic payments set up where your subscriptions, your internet, phones, utilities, all will come out of this credit card every month. Or some banks will link the personal line of credit to your checking account. So you can still write checks, you can still do debits out of the checking account and it have a zero balance, but it'll go over into the line and pull out the money as needed. Sort of like an overdraft protection. There should be no fees charged for this service. So the income goes in, the expenses come out, and of course we're going to charge interest because at 12%, we need to know what the interest charge is going to be approximately. So I averaged out the $10,000 and the $4,800. So the interest charge should be approximately $75. Add all that back in, $9,200 would be the balance at the end of the month, and then in month 2, your income goes in again. So the balance is back down to $4,000. The expenses and the interest would come out again, and in month 3, they would do it again, bringing their balance down to $3,191. They'll do this for 3.5 more months, and this loan will be paid off. So in approximately 6.5 months, they paid off a $10,000 loan that was standing at a $500 payment, and it's no longer there. It's gone. Then they would move on to their car loan if they wanted to and start chunking it down. When we use a line of credit and when we have everything set up automatically, it makes our lives so much simpler because now we are leveraging the bank's money. Those payments are coming out automatically. We just swipe our card when we need food or gas or whatever. So if it took 6.5 months for this $10,000 loan to pay off, how much time do you think it's going to take for the car to pay off? Cars are usually on 60 to 72 months, right? So if you can pay a car off in a year, you're doing a good job. I hope that this kind of clears up the idea of why we are using the lines of credit instead of our checking accounts. Because when your paycheck is sitting in the checking account, it's not serving you. It's being depleted because you're spending here and there and doing this and that. But when you have it sitting in a line of credit, it is serving you because you're paying off this personal loan and your money sitting inside of the loan is taking care of a lot of that interest that they're going to charge. Because remember, the banks charge on an average daily balance. So every day that this balance is low and lower and lower, that interest charge is going to get lower, lower, lower. That's what we're going for. A personal loan, remember, it's set up on an amortized interest, which means all of that interest has been front loaded. You're going to make $500 payments until this pays off. But when you bring a line over, you pay this off immediately. You stop that interest charge, and now you're just dealing with what your income is not covering every month. Even though this is at a higher rate, it's still going to pay off faster because you're throwing your income in and you're knocking that interest down. The point is to get financially free. A line of credit can help you do that. If you have any questions or comments, please leave them below. I look forward to hearing from you guys, and I hope you guys have a terrific week.